اسمي ناصر حسن إبراهيم زبدان. عندي مزرعة مكونة من 3 أصناف: صنف ورق ونخيل وعنب مثمر. حبيت أستثمر إشي اللي أنا أستفيد منه، فأخذنا القرض $21,000 عن طريق الاتحاد الأوروبي والبنك الاستثمار الأوروبي. استغليته في 3 دنومات بيوت محمية، واشتريت من نفس المشروع أو القرض اشتريت منه 30 شتلة بلح.
Building a strong Palestinian economy is part of our commitment towards building an independent, democratic and economically viable future state of Palestine. The EU are working with small businesses. These companies account for 85% of the registered companies in this region and almost 2/3 of the jobs in the formal sector.
كان وضعي قبل ما أخذ القرض كان تعيس جدا، فيش عندي دخل، فيش في عندي راحة نفسية. أنا تغير علي إشي كثير، إني أنا أول إشي تريحت ماديا، حتى عيلتي برضو تريحوا، وما شاء الله الحمد لله اليوم احنا بوضع أحسن من أول. زوجتي وأولادي فهم يعني شجعوني على أن أخذ القرض ونطور حياتنا من هذا المشروع.
يتم متابعة المقترضين سواء كانوا أصحاب مشاريع أو حتى قروض شخصية طول فترة حياة القرض حتى السداد التام. نحاول نشوف الأثر اللي تم على المشروع، وإحنا بنقيس الأثر بعدة سنوات، وبنشوف مدى مساهمتنا في زيادة دخل المقترض، مساهمتنا في خلق فرص العمل، مساهمتنا في تحسين ظروف المعيشة الخاصة بالأفراد.
Together with the EIB and local partners, the EU create new opportunities and help shifting the Palestinian economy from aid dependency to sustainable economic independence.
أتمنى من الاتحاد الأوروبي أنه يدعم صغار المزارعين لأجل تقويمهم على الحياة.
The COVID-19 crisis has brought about new challenges for client protection. Across the world, consumers are experiencing higher levels of distress caused by direct experiences of fear of the health, economic, and social impacts of the crisis. It is at such times that consumers need to be safeguarded as they are most vulnerable to commercial exploitation. At the launch of this week's European Microfinance Week, the headline of the special report spotlighted on the importance of client protection. And in the words of Christophe Schills of Luxembourg's Ministry of Foreign and European Affairs, he commented on the need for continued emphasis on client protection as COVID-19 pandemic stresses both financial service providers and households. Client protection is a critical component that is at the heart of microfinance. The client protection principles are aimed specifically at safeguarding the interest of microfinance clients, and the certification undertaken by providers have strengthened the commitment by these MFIs to take practical steps to treat clients fairly and respectfully. Warm greetings to all the participants that have joined us in this plenary session. I'm Eliki Mboletawa from the Alliance for Financial Inclusion, and it's my pleasure to moderate this very interesting plenary. Ladies and gentlemen, our session will take stock of where we are today and what the future holds for client protection, especially focusing on the new client protection framework. We are delighted to have an esteemed panel of speakers from leading institutions that have made client protection a core of their work and regulators who lead the efforts. Our session today will begin with a brief introduction from our panelists, followed by questions that will be directed to each of them to build on the objective of the session. We will then allow for a Q&A where we invite you, the participants, to use the chat box for any questions you would like to ask and to which of the panelists you would like to direct it. Without further ado, let me introduce our esteemed panelists, Ms. Laura Foos from the Social Performance Task Force, Ms. Emmanuel Javoid, Symbiotics, Mr. Aldo Mauro from Microfinance Rating MFR, Vadet Anadoli from AFK Kosovo, Tim Kassan, Premier Group of Kenya, and Moses Musantu from the Bank of Zambia. Ladies and gentlemen, I now would like to start with requesting our panelists to provide a very brief overview of the institutions they represent and the work it has undertaken in the area of client protection. So we'll start with Laura. Over to you, Laura.
Hello, everyone, and thank you to e-MFP for inviting me to be part of this panel. I'm Laura Foos. I'm the Executive Director of SPTF. SPTF is a global network of people who are committed to creating benefits for customers through financial services. During the opening session on Wednesday, Ilabat of Sewa wisely said that our efforts and our thoughts should focus on people and not institutions. I love this because that's what SPTF's Universal Standards for Social Performance Management are focused on. The management practices that FSPs can put in place so that employees and customers, in other words, people, benefit from financial services. When I say SPM practices, that includes defining and monitoring social goals, developing client-centered products and services, treating clients and employees responsibly, and balancing social and financial performance. We're going to have a great discussion over the next hour, and I'm excited to hear from my fellow panelists. I can say that for my part, there are really two main things that I'd like for people to walk away in hearing what I'm saying. And I'll be discussing these in greater length after the introduction, but to start, the first message I want you to hear is that the SPTF, in partnership with Cerise, is now stewarding the Client Protection Standards and the Client Protection Resource Center. These are not going to disappear. They're in good hands with us. The second thing is we are developing a new way for financial service providers to demonstrate their progress towards client protection best practice, which we're calling the Client Protection Pathway. Having this pathway will also help investors and regulators more easily identify organizations who have a real commitment to client protection. So I'm excited to tell you more about these things and looking forward to the discussion. Thank you.
Thank you, Laura. Emmanuel, please.
Finance unit at Symbiotics. The blended finance units notably includes the fact of overseeing two funds, one which is Ragnifa, that finances financial institutions financing micro and SMEs in sub-Saharan Africa, and also advising the MEF, Microfinance Enhancement Facility. Sorry. As part of the work of Ragnifa, obviously we are always reviewing the practices of the investees and potential investees in terms of client protection and social performance. This is a very important part of the work we do. But also in this recent period, we've conducted and commissioned several studies that were meant to also bring the voice of the clients at the forefront of our work. And so we've conducted impact studies, including interviews of end clients and borrowers. And we've also, in the most recent month, conducted several rounds of surveys to understand the impact of COVID-19 on the lives and businesses of the clients. This is something very important to us, to be sure that we take this into account in the way we design our work and that we make all this as relevant as possible. Now, on top of this work that I'm doing for Symbiotics, I am also part of the Social Performance Task Force board and co-chair of the investor working group there. And more specifically, I'm actually steering the work of a small working group, actually not so small, a working group that has been starting to work on client protection in this new era post-SMART campaign, and notably working on what could replace the endorsement and designing this product to be made available for everyone.
Thank you, Emmanuel. Aldo, please.
Good afternoon, everybody. Thank you for having me here in this conference. And my name is Aldo Moauro, and I am the Managing Director of MFR, a specialized rating agency for inclusive finance. And we have been involved in the Smart Campaign Client Protection Scheme as a certifier, and actually we have conducted more than 100 certification in all the region, which corresponds to about 60% of the market share in terms of number of client protection certification, and 72% market share in terms of current active certifications. MFR has performed more than 160 certification projects, including surveillance audits, the expired certifications, the withdrawn, and the ongoing certification between 2012 and 2020. And since the very beginning, MFR has actively contributed to the implementation and testing of the standards. And this was done with the first testing pilots in Bosnia, with 2 institutions in Bosnia in 2012, then testing and piloting of the 2.0 version of the standards, and finally with the identification and definition and fine-tuning of the standards for digital credit providers. And therefore, the involvement has been quite intensive during the year. So we are, of course, part of the task force coordinated by the SPTF to identify and define a new approach after the Smart Campaign withdrawal. And of course, we are very happy to put our experience at the service of this very important process for a robust future of client protection principles and client protection certifications in the future. Thank you.
Thank you, Aldo. Vadet, please.
My name is Vadet Anadoli. I am Executive Director of Agency for Finance in Kosovo, which is the first microfinance institution that was established in Kosovo after the war in 1999. It was established by Mercy Corps International, which has provided the initial funds to institution. And the purpose of the institution is to provide sustainable access to small loans, which in our case is up to 25,000 euros for micro enterprises and individuals who don't have access to banks. Currently, Agency for Finance in Kosovo operates through its 24 offices in whole territory of Kosovo, including minority enclaves. We run the portfolio of around 37 million euros, and we do have around 22,000 active loans. As a socially oriented institution, AFK was the first MFI in Kosovo to get certified on client protection principles, which happens initially in year 2015, and then certified again the second time on year 2019. Therefore, AFK fully implements all client protection principles.
Thank you, Vadet. So, Tim, please.
You're welcome.
Good afternoon, everybody. It's my pleasure to be here on this panel. I'm the CEO of Premier Credit. We're a microfinance credit-only institution operating in Kenya, Uganda, Tanzania, and then very recently we started in South Africa. We have a portfolio of approximately $80 million and about 300,000 active clients across the region. We serve those clients from about 200 branches, and we have over 2,000 staff. Our involvement with client protection, it's obviously a core focus of our business. An unhappy customer, an unprotected customer is not going to come back and take a repeat loan, and so it makes really good business sense to ensure we have the highest possible standards of client protection. That said, we tried to get certified in 2018 by SMART, and it was a very good exercise for us. We thought we were quite strong on client protection, and when we went through the first round of review, we found that we were scoring about 40-45%, and it really sort of woke us up. And I think those SMART criteria that you had to hit were very tough, and they made sure that you worked everything into your training, your manuals. Made sure your clients knew everything, and so we worked very hard, and then went through the formal certification process. And I would say we complied with about 95%. I think it was one of Aldo's team that did the certification, and so we were happy that we had improved so much, but of course not happy that we were not successful and we didn't get 100%. I think that's one of the discussion points perhaps is. With SMART, if you didn't get 100%, you failed. We felt at 95% we'd come a long way. And we'd actually been planning to redo our certification with SMART this year, but of course this year wasn't a good year for certifications. But hopefully with SPTF and the panel here, a new certification is going to come out. And we'll certainly be in the queue to get certified in 2021. Thank you.
Thank you, Tim. So we hope that this session would really bring about new light to the new approach that we're looking at. And last but not the least, we have Moses. Moses, please.
Thank you, Ediki, and good afternoon, everyone. It's quite wonderful that we have this opportunity to be part of this panel. And we look forward to an exciting discussion regarding our topic for today. My name is Moses Musantu. I am the manager in charge of consumer protection and market conduct here at the Bank of Zambia. And a brief background about the Bank of Zambia is that it's the central bank of Zambia, and it derives its powers and functions from our national constitution and subsidiary registrations. Our primary objective is basically to formulate and to implement monetary and supervisory policies which are aimed at achieving and maintaining price and financial system stability that will help us to support sustainable economic development for our country. So as a regulator, we are in charge of the commercial banks, the payment systems, the designated payment systems, and also non-banks institutions, excluding the insurance and pensions firms, as well as entities that are operating under capital markets. So these other institutions are regulated by our sister sector regulators. As a Bank of Zambia, we are charged with the responsibility of ensuring confidence and integrity in our financial sector. And this basically entails that we need to maintain a sound market, business practices, and appropriate consumer protection mechanisms in the sector. Under our supervisory function, the Bank of Zambia it conducts what we call consumer protection supervision function. We also conduct financial education. And then in the current state of affairs, we don't have a financial ombudsperson office. We are creating this office, but in the absence of the ombudsperson's office, we as the Bank of Zambia, we act as an external dispute resolution body. And then in also to try to strengthen our pursuit of our mandate, the Bank of Zambia, in our current strategic plan for 2020 to 2023, we have deliberately focused on two focus areas, and that are financial stability as well as financial inclusion. Those are our two focus areas between 2020 to 2023. And then we are also a proud member of Alliance for Financial Inclusion, which is basically a think tank. It's a policy leadership alliance, and its membership is quite vast across the globe. And we, as Bank of Zambia, we are privileged to be the current chairperson for the working group on consumer empowerment and market conduct. And this working group basically is basically a platform for policymakers where we do discuss policy and as well as regulatory issues that are related to consumer empowerment initiatives as well as market conduct regulations. Currently, we have about 64 member institutions drawn from 59 countries as members of the Consumer Empowerment and Market Conduct Working Group. In a nutshell, that's what I can say about our Bank of Zambia as well as our participation in Alliance for Financial Inclusion programs. We look forward to a very wonderful discussion today. Thank you.
Thank you so much, Moses, and thank you very much to the panelists that have just provided an overview of the work that they do. To all the participants that have just joined us, welcome to the Client Protection in the Post-Smart Sector World plenary session. Now we will deep dive into the discussion on why we are having this particular session, and we are so fortunate to have a diverse range of providers, investors, raters, and also the regulator amongst us today to deep dive into this new discussion. And I would like to pose my first question for her intervention to Laura. So Laura, if you could please share with us the work that is underway with the SPTF, the investors and the raters, in coming up with this new framework for client protection evaluation. Specifically, what is the motivation behind the new client protection pathway framework? Thank you, Laura.
Yeah, thank you. When the SMART campaign, who is a very long time partner of SPTF and Cerise, when they told us this summer that the campaign was wrapping up, we spent a lot of time with them to discuss what we think should be involved in the future of client protection for the industry. And the bottom line is that SPTF and Cerise are partnering to pick up the client protection baton, so to speak, and to take it forward in new ways. First and foremost, SPTF has become the keeper of the client protection standards. And of course, the client protection standards have always been part of the universal standards for social performance management, and that's going to continue. But whereas before the SMART campaign would develop the client protection standards and then hand them back to us to incorporate into the universal standards, now SPTF will be in charge of the evolution and the upkeep of the client protection standards as well. In a similar vein, SPTF and Cerise will develop and maintain an extensive library of client protection resources, and we're going to continue to convene and train a community of client protection experts. So these experts are trainers, assessors, TA providers, and others who have been so important to the implementation side of this work. So we're excited to be the stewards of the knowledge resources and the human resources that have been built up to support client protection in the field. I want to dive a little bit now into the Client Protection Pathway Initiative that Aliki just talked about. We're working with the Social Investor Working Group to reimagine how FSPs and investors can interact with the client protection standards. Our Social Investor Working Group includes over 100 investor organizations, and there are about 50 really active members right now. And they've made two things very clear to us. Number one, investors want to have a way to identify FSPs who have strong client protection practices. And two, they want to have a trusted source for that client protection information, ideally a centralized location for locating financial service providers who have a high level of commitment to client protection. So with our social investors, we're developing an initiative that we're currently calling the Client Protection Pathway. Simply put, the pathway outlines the actions that FSPs can take to demonstrate their commitment to strengthening their client protection practices. For the sake of time, let me just describe the three main steps in the pathway. They are commitment, self-assessment, and external verification. So it starts with commitment, whereby an FSP commits to implement the client protection standards, and the FSP's name is added to a list of committed organizations that's going to be housed on the SPTF website. With that commitment is the self-evaluation. Within 3 to 6 months of indicating that commitment, the FSP is going to have to complete a client protection self-evaluation and post the results on their own website for transparency. Then we get to the point of external verification. The FSP moves up the pathway via external verification of their practices through a client protection certification or a social rating. And this is going to be a tiered structure as well that will evaluate progress along the way of these 3 steps. So basically at a beginning level, an intermediate level, and a top level. The top level will be the equivalent of a client protection certification today, but if an organization doesn't quite reach that spot, they can be recognized for where they are. So the primary motivation with the client protection pathway framework is, one, to increase the number and the types of financial service providers who feel motivated to work on their client protection practices, and 2, to increase the transparency in the market. Right now, investors can get a lot of information about FSPs who have received client protection certification, but that's really just a small subset of the industry. The pathway is going to be a way to recognize other FSPs who are making progress on client protection and who want to demonstrate in real terms their commitment to client protection. So I'll hand it back to you.
Thank you so much for those insights, Laura. I think it actually provides a framework and an outlay of what we are looking at with regards to this new approach or the new pathway. So my next question would be directed to Emmanuel. So Emmanuel, from the investor's perspective, how do investors view or see the difference between endorsement and commitment to the client protection? And specifically looking at the development and design of this new client protection pathway, what has been the role of Symbiotics?
Yeah, thank you for this question. So indeed, we do see quite a large difference between endorsement and commitment to implement. I think basically endorsement has been this very first step to indicate that you are interested and by the client protection practices and had interest in moving those forward. But this has been a step that doesn't give that much information about where the institution currently stands, actually, or the individual currently stands on their practices around client protection. And definitely what we want to design through this commitment to implement is to say that if an institution wants to step forward and indeed mention their name on a list saying, yes, this is something that matters to me, client protection is something I care about, that I want to promote for my end borrowers or for my investees, in the case of investors also, this is something that should also be coupled with a first step of being transparent about where you stand in terms of client protection. And we want also this first step to be something that, first of all, is a very accessible one. We want this one to be a step where no one can say, well, it's too costly, it's too complicated, I don't have the time, or something like that. We want no excuse about this step. And so that's the reason why we've thought about this commitment to implement really as, you know, you put your name on a list saying this is something that matters to me, and within a few months you fill in a form that describes your client protection practices, and you disclose those in a transparent way on your website, on the SPTF website. We believe with this we have already a sector. If this is successful, we would have a sector that already would provide a lot of information about where we collectively stand in terms of climate protection. And this is also a first step on which everybody else can actually build. So meaning that if I'm an investor, if I have an institution that is a potential investee or an existing investee, and I can go to their website and look through that disclosure, I can have a first idea where they stand. I can make my own self-assessment, the start of a due diligence in terms to know where they are. I can engage with them more precisely on how to potentially improve. Also, this is an information that can be used as a point to start for any external evaluation. And so we do strongly believe that this is, a first step that should be this accessible step, open to everyone, and behind which everyone could also stand, with the idea of saying this is something that we can all easily, as investors, require from our investees to do. This is something where we have had, I think, difficulties in the past being able to require as an investor to from our investee to become certified, because typically we knew this bar was extremely high. And we had a lot of very good investees we have a lot of very good investees in our portfolio that would fail the current certification, because this was a very, very strict bar, and this is still a very, very strict bar, and it's very good to have that as an aspiration. But this is something that we, for now, feel is creating insufficient incentives to improve. We want the next step to be something that provides all possible incentives for institutions to be transparent and to improve their practices, because I think ultimately that's the overall goal, that we gradually raise the level.
Thank you so much, Emmanuel. I think it now segues into a very, very appropriate time when we now hear from the rater, MFR, in terms of this new approach, a new pathway that we are taking. What Emmanuel mentioned was the expectation is that we want this new approach to be accessible, for it not to be too complicated, and there is no excuse for users to utilize or go into using this new climate protection approach. And so my next question would be to Aldo. So Aldo, from the rater's perspective, what will change in the climate protection certification process under the new scheme? If you could share with us the old process and the new process, and if you can briefly outline as well to the listeners or participants that are joining today on the tiering system. Thank you, Aldo.
Sure. To be clear, let's maybe divide into two parts. So the first part is what remains the same compared to the previous Smart Campaign certification. And then the second part is what are the improvements compared to the previous system. So the climate protection principle framework will remain the same, okay? The new product will be fully aligned with the previous climate protection standards and compliance criteria. And this will allow for, first of all, continuity compared to the previous CPC product. Secondly, a common language in the inclusive financial industry. And third, harmonized and comparable analysis among the different certification bodies providing climate protection certification. Methodology of the analysis will be the same, maintaining the same depth of analysis. What are the improvements compared to the previous climate protection certification scheme is that the new methodology proposed is based on the past 10 years experience, regional specificities, backtesting, so a lot of information that we can use from the previous experience, and of course crucial to design the future. Of course, financial service providers and investors' feedback are very important, and these have been taken into consideration. So if we look at the differences improvements. So the previous smart campaign methodology was a pass and fail system. Okay, the new idea, the new approach will be based on a tiered system with an entry level. That means a subset of indicators defined as minimum compliance that need to be 100% fulfilled. And then after this entry level, there are 3 levels of advancements according to the percentage of achievements. What are the benefits of this new approach? Well, first of all, this is reducing the risk of failing by considering percentages of score of output as opposed to a pass and fail, as it has been said. So it will provide an idea of where the financial service provider is standing, and where the institution is in the process, and how it is improving. The second benefit is that it is encouraging more financial service providers to start the client protection path, and as well the certification. And this means receiving a formal recognition of their achievements and measurement of their progress. Third, one level in the tiered approach will be the equivalent of being certified under the previous smart methodology, so the highest level, in order to guarantee the continuity with the previous methodology. In terms of process, so what are the differences? So the previous smart campaign methodology was providing a 4-year validity with a progress phase, which is a window where the institution could fix the few gaps remained, and a check-in after 2 years. Okay, this was the old scheme. According to the new scheme, a standard validity of 3 years with no check-in and no progress phase will be considered. What are the benefits of this? Well, first of all, the average annual cost and team time to keep the client protection certification valid for the financial service provider will be lower. And secondly, with a tiered approach, this would give the financial service provider the possibility to improve their performance after 3 years and not after 4 years. But of course, it's the decision of the financial service provider to update the certification even before 3 years, if this is the intention of the financial service providers, if the financial service providers believes that it has improved even before the end of the validity of the previous certification. So I believe that there are clear, I mean, besides listening to what the experience has been telling us and what are the feedback from the main stakeholders, there are clear benefits in terms of transparency, in terms of inclusion as well. You know, the bar was quite high for so many financial service providers, which has triggered to a lower transparency on their status and on their client protection practices. And also this would trigger more efficiency to the process by having, you know, by having the possibility to increase the number of years of validity and avoid the check-in in the middle of the period. The last thing I would like to mention is that the tiered system is something that keeps the the incentive high in financial service providers to improve, compared to a pass and fail. Sometimes we have noticed that those that passed, that failed the certification, were somehow reluctant to continue the process. We believe that the tier approach could really be an incentive, a strong incentive for them to start and to continue the process of improvement of their client protection practices. Thank you.
Thank you so much. Thank you so much, Aldo, for those insights coming from the raters. So now, ladies and gentlemen, let's hear from the providers themselves. So my first question goes out to Vadet. So Vadet, for AFK Kosovo, how would you consider the possibility provided under the new scheme to better benchmark your performance in the client protection? Vadet, please. Okay, must be some technical issues with Vadet. Maybe I move to Tim. Tim, for you would be on this new client protection scheme. How do you see this as an incentive to enhance the client protection processes in your institution within Premier Kenya?
Thank you, Liki. Yeah, I think it sounds very exciting, and I think the tiered approach makes a lot of sense, specifically to ourselves. I mean, where we failed in 2018, I feel we would have got tier 3 at least, because we were sort of 95% of the way there. But so tier 3 sounds a lot better than tier 1. But previously, if you failed, you were all lumped together, whether you were entry level or nearly there. So I think that's a great improvement. I also like the timing for the recertification. That it is a time-consuming and expensive exercise. You need to put some resources to it, and of course that is tough. It was tough, and we're a relatively large institution, so it would be doubly tough for a smaller MFI or financial services provider. I do have some sort of comments. Aldo had said the certification will be done on exactly the same basis as as SMART, so I'm presuming all the indicators will be exactly the same. And our sense was that some of those indicators, when they were formulated 25 years ago, made a lot of sense, but the sort of world has moved on a bit. And just to put that in context, our entry-level product and our small business sort of micro product, you could call it, is a 1-month working capital loan or a 4-week working capital loan. And we do a lot of loans at between $50 and $80 to all the hundreds of, to the tens of thousands of small-scale retailers. We do sort of 25 to 30,000 of those loans every single month across East Africa, where 85% of economically active people make their living in the informal sector. And I think one of the requirements that we didn't pass on, and we said we weren't prepared to change, was that you had to have an application form, you had to have a loan agreement, you had to have a key facts document, and I forget what the other document was, but you had to have 4 documents. And we said to our rater, we're going to destroy rainforests giving out 30,000 times 4 documents in times 2 in duplicate every month. Surely we can be doing these things digitally in this day and age. And then I think the other challenge with that product, it's a very expensive product to deliver. A small micro loan is an expensive product to deliver, and our yield on that was considered to be too high. We demonstrated that it was really an entry-level product, and we made losses on that product. And so I would hope that it was only once we got clients up to this sort of 3-month level that we could be doing it profitably. And I would hope that the standards would allow some sort of flexibility on that. But overall, I think it sounds very positive, and I think it will broaden the net. It won't be the sort of just 100. I mean, there are thousands of MFIs around the world, and the fact that only 100 got SMART certified showed you that it was a fairly small population that SMART actually drew in. I mean, hopefully with this new methodology, we can be getting it up into the thousands. Thank you.
Thank you very much for your response, Tim. If I could go back to Vadet. Vadet, do you want me to repeat the question, or you want to come straight forward?
No, it's okay. I just got disconnected after you give a question, and simply I will continue now. I am okay now, it seems. We've been talking about the new scheme and the client protection principles. And as a practitioner, I would like to say that, as I mentioned earlier, as the institution who, since 2015, it has embedded in everyday activities all requirements of client protection principles, we think that new changes in the new scheme will be easy to adopt. AFK is committed to hold the certification on an ongoing basis. Therefore, we are ready to adopt the new proposed standards. We really think that it's very important for MFIs to preserve all good practices to lead to client protection, and this would be enabled only through official certification for this purpose. Because so far, as I mentioned earlier, we are not controlled, so to say, by any institution in our country, such as central bank or any other special institution. So the only institution that was somehow tracking what we do and are we doing it well was Microfinanza so far. So in that regards, we welcome all new initiatives. I am still awaiting to see more details about those initiatives and the changes. But I think, in principle, the core work that we do in that regards to client protect is there.
Okay, thank you for your response, Vadet. So now we have a regulator with us, and I think one of the questions that has been raised from the audience is it free for financial institutions to get the certification? Why not working with the regulator directly? And so we have Moses Musanto from Bank of Zambia here. So Moses, how can we sync client protection certification with what regulators are undertaking on the supervision of market conduct? So it'll be good to hear on your response on that. Thank you, Moses.
Thank you, Aliki, and thank you for that question. I think from the onset, it is critical that the regulators or policymakers ensure that the policy and the regulatory frameworks in the various jurisdictions include client protection standards. I think that would be critical, and that will enable us to have that sync. And then secondly, from the Consumer Empowerment Market Conduct Working Group point of view, we have observed that a good number of our members over the years, they have remarkably reported policy changes in consumer empowerment market conduct thematic area. And these, to a large extent, have included client protection certification aspects. So as regulators, as we conduct our regular market conduct supervision, the client protection principles are among the elements that are assessed. And it's good to note that if you look at the market conduct policy outcomes, these are quite closely tied to the client protection certification. If you look at the 7 market conduct policy outcomes from the AFI point of view, and these are what the regulators under AFI have agreed to more like to enforce. If you look at the first one, we have inclusive and competitive marketplace. The second one is suitability of products. The third one is transparency and marketing. The fourth one is ethics and professional standards. The fifth one is due care. The sixth is safety and security. And then the last market conduct outcome is legal environment. And basically all these 7, they are quite in tandem with the client protection certification. So as we conduct our market conduct supervision function as regulators, these are aspects that we tend to assess in terms of adherence to these. And then also, based on the market conduct policy outcomes, including the client protection certification, as regulators, we have developed individual regulations as well as knowledge products. For example, this year, 2020, we have developed knowledge products relating to complaints handling in central banks. This is the framework, as well as experiences in the implementation of the principles of disclosure and transparency. And all these knowledge products, they are basically embodying the aspect to do with client protection certification. And as we do our work as regulators, these are aspects that we tend to assess to ensure that there's adherence to the required standards. And over time, we have also tried by all means to ensure that trainings or capacity building initiatives are conducted as a way of creating capacity in our, first of all, in our regulators as well as in the financial service providers. The idea is basically to ensure that there is a culture, a consumer culture-centered approach is embedded in each and every financial service provider. So we have this client protection certification aspects, but these have been, to a larger extent, they have been embedded in the regulatory policy frameworks in most of the countries around the globe. And I, for one, am quite happy to hear that the new tiered approach will have different level of compliance in terms of consumer protection. And I think it will enable us as regulators to be able to ask the regulated entities to at least be compliant with some level of those aspects that have been identified. And for example, we can basically require FSPs to comply with the commitment level, which is basically the base of not harming a customer. And from a regulator point of view, our desire is to ensure that ultimately the clients are fairly treated and they have got value for their money, even as they interface with the financial service provider. I think in a nutshell, that's what I would respond in relation to this question, Eric. Thank you.
Thank you very much, Moses. So I think our panel has provided their various interventions and feedbacks on the new approach that we are going to be moving towards to. But it would be amiss if we don't capture some of the questions that has been asked by the participants, as we promised that we will have a Q&A session. So I think this first question, I've pre-selected the questions considering that we've been informed that we have around 7 minutes to wrap up. So the first question would go to Laura. How would the panel see the external assessment replacing or complementing social ratings? The second question would go to Emmanuel. In what circumstances would investors promote one or the other? And then the last question would go to Aldo. About the higher bar, who will be qualified to do these external evaluations? Only raters? So maybe I start off with Laura, please.
Great question. We are, as the SPTF, we really encourage organizations to think about the entire body of the universal standards. So it's not just how you're treating customers, but also how you're treating your employees, how engaged your governance and management are in the goals of the institution, and also the spirit, frankly, of the client protection work and creating value for clients. So ideally, we would love for organizations to continue to do the full social rating, because the social rating analyzes from an external standpoint the entire body of work on management related to the social performance standards. The social ratings are not going away. And for many impact investors, actually, this has become more important. This has been, in some markets, social ratings are demanded more than client protection ratings are. This depends on the market, depends on the customer. The reason we are keeping the client protection certification product is because it's in a lot of the covenants that investors have issued. So the investors are particularly interested in making sure that the do no harm element is maintained. So both will be available. Great question. I'm really glad it came up because we hope to see both used in the future.
Emmanuel?
Yes, thanks also for that question. I think the idea is to be designing the commitment to implement in a way that ultimately we could require that from all our investees in a similar way that we require from all investees to have audited financial statements, something of that kind, something that would be a really minimum requirement that you could ask from any investee, again, because this is something that has no cost and just is there to demonstrate the commitment of the institutions to go towards good client protection practices. So that would be the first one. I think the fact of requiring certification and putting obligations to be certified at one or other level is something that is definitely something that equity investors can easily use, I think, for all their affiliates. So that's also something that we think can be done. And then in terms of how debt investors, for instance, can try to incentivize the institutions to get certifications in a tier or in another, I think that's something that still is being discussed, and that depends a bit on how, what type of relationship each of the investor has with the investee. But this is definitely something that at least I think we could, as Symbiotics, also require for institutions where we know they have some gaps and where we would be able to tell them, we can start working with you, but maybe if you want a renewal for a loan, we would want you to go to the next level. And at least go through a first level of certification or a second one. This is the way I see those.
Thank you, Emmanuel. And Aldo, on the ratings. You're muted.
Sorry. The certifications have been issued by rating agencies so far, which have been recognized by SMART so far for a certain number of reasons and prerequisites. The first one is, of course, independency and no conflict of interest. So the raters are not providing, for example, technical assistance, and this is something very important to assure the high quality of the certification. So, of course, the external evaluators of SMART have played an important role and can also play an important role in the future in accompanying and coaching the institution in the preparation of the certification, or in general in improving the client protection practices of the financial service providers. But the external evaluation, the certifications have to be issued, in my opinion, by entities who are dedicated to that and are absolutely independent, and that are not providing other type of services like TA, for example. I would say that this will remain similar to the past.
Thank you very much, Aldo. And now, ladies and gentlemen, we are coming towards the end of our session. Very quickly from Emmanuel, in a minute, the important role of stakeholders in the implementation of the new approach.
Well, I think what we're trying to do in the work that we're organizing within the SPTF is really to have as much involvement as possible of all the stakeholders and the counterparties. So for now, the raters and the investors, but we hope to also involve the FSPs in this work once we have a first product to really show them. And the idea of involving all those stakeholders is to make sure that we have the strong backing of everyone, and that everyone can stand behind those new products and really make the commitment to use them. Yeah, that's, I think, what we're striving for, at least in this run-up for the end of the year.
Thank you, Emmanuel. And Laura, the outlook on the future of client protection and the role of SPTF.
Thank you. Well, we're really excited about the future of client protection. And one thing that in particular makes us very hopeful is how involved our social investors are in the process of reimagining the client protection pathway, and how involved the raters are as well, to be involved, but also to collaborate with one another. That's pretty amazing considering that the rating agencies are competitors. But it really speaks to their commitment to creating evaluation products that are going to benefit the industry. So our hope with the client protection pathway is that it's going to encourage more FSPs, more types of FSPs as well, to get on the path towards best practice, because they're going to be able to demonstrate their progress and not perfection. So ultimately, we want the focus to be on improving practices, because that's ultimately what's going to benefit the customers in the end. So thank you very much for everyone and your attention today, and we look forward to being in touch with you.
Thank you so much, Laura. So ladies and gentlemen, participants and dear panelists, that brings us to the end of our session. We have 1 more minute before we close. But then again, we hope that you find this particular plenary session very enlightening in terms of the new framework that we're looking at. Again, at the end of the day, it's protecting clients and not protecting the FSPs. So on that note, thank you so much to the panelists. Thank you so much to the technical team and to all the participants that have joined in. For more information, you have the various cards of the panelists that is available online as well, that you can go directly to, and if you want to converse and take forward the discussion. Thank you very much, and good night from Kuala Lumpur, and good day to everyone else. Thank you.
Bye.
Bye-bye.
Bye.